Hey everyone, welcome back. So, is this the moment crypto's been waiting for? First up, the Fed. Yesterday's US CPI numbers, pretty tame. That's all markets needed to go full throttle on pricing in a September rate cut. And boom, treasury yields drop, dollar weakens, equities pop. But wait, crypto? It's playing its own tune here. Bitcoin dipped a little, don't panic, but Ethereum? That one's on a heater, pushing toward levels we haven't seen in nearly 4 years. And this isn't just noise, it's a signal. Rate cuts mean cheaper capital, and cheaper capital means people start taking risk again. But here's the kicker. The dollar weakening like this, it's also a silent pump for crypto. Global buyers suddenly have more firepower in dollar terms. But here's what you might have missed. Stablecoins are getting busy. Across Europe, stablecoins are greasing the wheels of liquidity. Yep, the very same digital dollars people shrugged off a few years ago are now pushing volume in cross-border transactions, institutional liquidity, even traditional finance infrastructure. They're acting like money, but they're still not recognized as money. And that's the catch. While they're powering trades and funding flows, they're also flying under a regulatory radar that's starting to blink red. If the Eurozone or the US tightens its grip on stablecoin issuance or KYC frameworks, that liquidity could evaporate fast. But if they're embraced, game on. We're looking at a new class of financial plumbing borderless, fast and programmable. So what does all this mean for crypto in the short term? Honestly, the stars are aligning again. Dollar down, inflation easing, rate cut ahead, and stablecoins holding it all together. It's a bullish cocktail. Ethereum surge might just be the early warning flare for the next leg up. But don't get cocky. Any surprise spike in inflation or sudden regulatory clamp on stablecoins could drain this momentum overnight. And US consumers? Here's where it gets tricky. A weaker dollar usually means imported goods get pricier. That hits wallets, especially if wages don't keep up. But if rate cuts come through and inflation stays muted, the average American might actually get breathing room. Finally, bottom line, this week's developments are laying foundation stones. The question isn't whether crypto's going up, it's whether it can hold on when the macro tide shifts again. But for now, bulls are still on the field. That's it for this quick development take. If you found this useful, smash that like, share, and subscribe for more insights as things unfold. Catch you in the next one.